VA loan secrets. Here are 5 surprising benefits VA financing offers veterans. And we do a lot of VA loans here. I mean, we're just outside of Washington, D.C., so there's a lot of military, both active duty and retired in the area. So these are the benefits that I have experienced in my career, or the top 5 benefits. There are others. And if you know of any others, go ahead and let us know. You never know. We may end up doing more videos about the benefits of VA financing. But let's just jump into it. The first benefit, and really I think one of the biggest benefits, is that VA financing offers 100% financing or no down payment. That's right. You can use your VA financing. You could buy a condo for $200,000, or you can buy a single family home for $2 million and potentially bring no down payment to the closing table. That is especially important for people who are purchasing their first home or may not have enough money to cover a down payment, the closing costs, the prepaids, and all the other expenses that moving has. Furnishing a property. Moving and buying a home is expensive. So being able to finance 100% of the home can be a major benefit to some home buyers. I'm not saying everyone should be going out and using the 100% financing, because at the end of the day, it's just math. You borrow more money, you're going to end up paying more in your mortgage. But in the right circumstances, for the right person, it is a huge benefit. Now, we'll talk more about the impact your down payment is going to have later on in this video, but being able to bring no down payment and purchase a property is a huge benefit. The next is competitive interest rates. And for the past 12 plus years, VA's interest rates have been really competitive with other products like conventional financing. You're not seeing the changes to the interest rates based on your credit score or your down payment. So VA's interest rates tend to be better than most products like conventional financing, saving you thousands of dollars over the life of the loan, if not hundreds of dollars a month. Now, this is because the government guarantees part of the loan, making it less risky for the investors or lenders, and therefore it translates into a lower interest rate for the borrower. So having not only 100% financing being available, having competitive interest rates, VA also does not have private mortgage insurance, or PMI. This is a major benefit, again, saving borrowers hundreds, if not thousands of dollars. There is no monthly paid mortgage insurance like a lot of other products. There is a upfront mortgage insurance, what they call a funding fee, that can either be rolled into the loan or brought to the closing table. And the amount of the funding fee depends on the amount that you are putting down and whether or not this is your first time or second time using your VA eligibility. Now, this is the chart that shows you what the funding fee is. Again, when you look at the difference between putting down 0 to putting down 5 or 10%, it may be in your best interest to put down a down payment and avoid paying that full funding fee. But it is a huge benefit to not have private mortgage insurance and not have that impact your monthly payment as it would with other products. The fourth benefit is the fact that these loans are a little bit easier to qualify for. There's more flexibility in the credit requirements than other products, meaning that VA does not have a max debt to income ratios. They don't have a minimum credit score. What you often see is lenders and banks add overlays to their VA product, making it more likely that they'll be able to sell it in the secondary market and get it serviced. But VA is very lenient as far as who can qualify for the loan. Now, every loan product or every VA loan is run through an automated underwriting system, and based off of that findings, which looks at your credit score, your reserves, your credit history, your employment history, your debt to income ratios, you will get an automatic findings. And typically lenders want to have an approve eligible. They want the software from these GSEs, Fannie Mae and Freddie Mac to give a approval, and they are likely to do your loan as long as they have that automated approval. Now, one great benefit that VA has is if you don't get the automatic approval when you run it through that underwriting software, you can do what's called a manual underwrite. And what that means is that we don't have to use that automated software approval. We can have an underwriter look at your file and specifically approve that borrower for that transaction. Now, it's not a guarantee that every file is going to be approved for this manual underwrite. Again, a lot of lenders are going to have overlays. They have to make sure that there are compensating factors, meaning additional benefits or things that the software is not able to read, like there's income that we see that you're making, but it's not used in qualifying you. You have additional reserves. You recently started a new job where you're making significantly more money and you're able to put more into savings, or perhaps you were previously renting a property, or you owned a home where the payment was much higher and you were on time making those payments, and you're not going to have what they call payment shock. But generally speaking, when comparing it to other products, VA financing is much easier to qualify for than other products. Doesn't mean everyone's going to qualify. It just means it's a little bit easier. So the next video, we will talk about how you can get pre-approved for VA financing. So be sure to check it out. I'll link it here in the video, somewhere over one of these corners. We'll go through a step-by-step guide how you can get pre-approved and see if you're eligible for VA financing. And if you are new here, my name is Tim Kelly. I am a mortgage loan officer right outside of Washington, D.C. And the purpose of this channel is to help you manage your mortgage and finance your real estate goals. So before we get to the fifth and final benefit, go ahead and subscribe and hit the notification bell so you won't miss out on any of these future videos where we're talking about VA financing or any other product under the sun that could benefit you on your real estate journey. So the fifth and final benefit is the fact that VA loans are assumable. What that means is that you can purchase a property, use a VA financing, and years or months down the road, when you are looking to sell this property, you can have someone take over your mortgage or assume it. Now, if you are very interested in this subject, let me know, because we can go in depth on the assumption process. There is so much involved in it, and especially over the last few years where people back in 2020 to 2022 were getting VA loans that start with a 2. The mid 2 to 2.5% to 3% range. I mean, just some phenomenal rates that were locked in during that time. And people now are able to purchase these properties that have VA financing and assume the mortgage, assume that 2.5%, 3% interest rate. But there's a lot of wrinkles to getting the loan approved for an assumption that we can really dive into in a future video. We're not going to have enough time in this video to really get into it. But if you let me know, I will dive into the assumption process in a future video for you. But being able to market your property and have a loan, if you have a great interest rate on it, that can be assumed by somebody, is a great selling feature when it comes to VA. This is a benefit that is only offered with a few loans, VA being one of them. So I hope you enjoyed this video. Again, if you're new here, hit subscribe, and we'll see you on the next one. Thanks for watching, and if you found this video helpful, check out some of these other videos. You might find them helpful. Check them out.